It's time for Business Now, a time we look at issues to do with business and the country's economy. Coming up in this edition of Business Now, we look at the performance of stock-listed companies and, of course, their financial performance in the year ending. Also coming up, we sit down with United Civil Servants SACCO Chief Executive Officer, who is challenging that a country that is lacking financial management skills cannot contribute to the country's economic growth aspirations. We have these inside this edition of Business Now. My name is Alex Banda. Please do stick around. Let's get into our program as we look at some of our major stories in the program. We are looking at the stock-listed companies' performance on the stock market. We begin with Press Corporation, which has announced a strategic plan to invest in different portfolios in the short to long term. Well, the conglomerate's chairperson, Radson Madiwa, made a disclosure in Banda during a stakeholder meeting. Let's hear what he had to say.
We have acquired some land in Nkoma, and we want to set up a 50 megawatt solar power. We've already gotten the approvals of Wescom. We are now waiting to get the approval from Mera. We are in discussion with some stakeholders that are going, some partners that are going to be working with us to bring in know-how.
PCL Chief Executive Officer Ronald Mangani told Business Now that apart from the $50 million which they have already invested in Press Energy, which is setting up a solar plant in Nkoma Lilongwe, is also intending to invest on mining, energy, health, agriculture sectors to expand the investment portfolio. We asked Mangani how they intend to meet these investment plans in their strategic plan, given the expensive domestic financing and as well as the scarce and hard to maintain foreign financing. Let's hear from Mangani.
So that puts us in a very difficult situation, and I think we are not the only ones who are suffering the impact of the cost of financing in this country. So interest rates are very, very high, upwards of 26% in certain cases. In some cases, interest rates are in excess of 30%, in fact. As we speak now, I think most people are paying more than 30% to borrow money on the domestic market. That's very, very high, because we are actually talking about investing in projects that will earn a return in excess of that 30% plus that people will be paying. That's not easy. Similarly, foreign capital is very, very expensive to raise, not necessarily in terms of the interest payment, but in terms of the cost of servicing debt, because it requires that you should have access to Forex. And unless you are generating Forex yourself and you are using the retention that is allowed by the regulatory authorities, it is very, very difficult to finance projects through foreign capital because of the servicing obligations. And those obligations actually become severe when there is a currency depreciation or devaluation. Well, it's a very difficult operating environment, but so far we have demonstrated our ability to operate in that environment because of the resilience that we have as a company.
That's about investment, but MTL, which is also a subsidiary of the conglomerate, has not been performing well. And PCL says they want to shred it off or probably find an equity partner to invest in the internet service provider. Well, they also have Madeco, which has not been performing well, and the company wants to now revamp Madeco. Let's listen to what Mangani has to say about this.
As you already know, we are already putting in place a 50 megawatt power plant in Nkoma through Press Energy, which is a company that we have already established. And through that company, we will be establishing a solar power farm in Nkoma. We have set in our strategy the objective of establishing 3 more companies moving forward, or 3 companies moving forward as we get into 2028, one of which is the solar company. And the other 2 that we'll be establishing will depend on the scoping that we undertake, and definitely the quantum in terms of the resources that we'll be putting there will not be anywhere less than the amount that we are putting in the Nkoma project. We have other smaller investments that we are, implementing. Like we have a discount house that we are implementing in partnership with Press Trust and other investors in Liberia. That's a small investment that we cannot be counting on the list of the big investments that we want to undertake. We also are putting up a soya milk production plant in Lilongwe together with another local investor. Again, that's a small investment that we're not counting on the list of the 3 investments that we're counting for the purpose of ticking a box with respect to investments by the time we get into 2028. We have made decisions to find an equity partner, maybe not an equity partner, but an equity investor that will actually get into MTL so that we exit that investment, so that we can focus our attention in the telecom sector in TNM and to the extent that we can in OCL. That's a strategic decision that we have made, and we think that it's the right decision in terms of conserving shareholder value. Similarly, we think that we need to resume operations at the foods company, popularly known as Madeco, and in order for us to do that, given the problems that we're facing with respect to that investment, we think that we should partner with a strategic equity partner. And as I speak now, we have already identified an equity partner that we are at an advanced stage of engaging in terms of establishing that partnership.
Now, still on stock-listed companies, we go to Standard Bank, which says it is going to invest more on technology, agriculture, tourism and mining in order to expand its operation and achieve a more economic growth. The bank's board chairperson, Christopher Kabanga, is speaking to Business Now on this and, of course, the 52.5 billion kwacha profit after tax.
We have a strategy in place, and these strategies are rolling strategies for 3 years. So we had planned 3 years back that this is what we are going to do. And when you do a plan like that, you factor in things that you expect will happen. And some of them do happen, others do not. So as you say, yes, we had calamities, we had cyclones, we had inflation, double-digit inflation, and then we had the devaluation of the currency. But in spite of that, we indeed managed to do a profit that was way beyond our expectations and also beyond what we did the previous year. And the simple answer to that is we remained resolute to our strategy. We remained resolute to make sure that our people are delivering on whatever that they have promised that they will deliver according to the strategic plan. When you make a profit, obviously you have to think about the future and invest. And we're doing that. Even after doing that, we were able to declare a handsome dividend. But we're doing investments, for example, in our IT. We're looking into areas where, for example, we did not concentrate on before, areas like agriculture. So that's one vector that we are looking at. Areas like mining, we're looking at that, and areas also like tourism. I think government has said ATM, as you know. So we're following the government strategy as a bank because we say Malawi is our home and we drive Malawi's growth. So whatever government is doing, we're following that closely to make sure that we are relevant in whatever the government is doing. And we are also watching closely what government is doing in the Vision 2063, because as a bank, we need to make sure that we are relevant in that vision. I expect that the headwinds, the economic headwinds will continue. I expect that inflation will ease a little bit. I expect that we still will have forex problems for a while. So the terrain will still be difficult for us to maneuver. But as a bank, we've got strategies in place to be able to deal with these things. The thing is, when you anticipate things, when you prepare for them, you can actually deal with them. The worst thing that you can do is not prepare for them. So yes, the terrain is going to be difficult, but we are going, as a bank, to be resilient and manage all that.
Away from the bank, let's now look at the tourism sector. We look at Sunbed Hotels and Resorts, another stock-listed company which has announced a 72% increase in profits, having moved from 3.1 billion in 2022 to about 5.3 billion in the year ending 2023. We speak to Vilipo Muntali, who is board chairperson for Sunbed Hotels and Resorts, speaking on the performance and, of course, concerns that came from shareholders in regards to an auditor which has just been employed to check their books.
The key driving factors for our performance for last year were improved measures around costs, the cost containment measures. You will be aware that we had some disruptions in the market by these geopolitical conflicts, mainly in Ukraine and Russia, that impacted the cost of doing business. Secondly, we had that devaluation towards the end of the year that also drove up the costs of our imports. Most of our supplies are imported. And as a result of that devaluation, you can imagine the impact that it had on our business. On the revenue side, our occupancy has improved greatly. We were around 56, 57%. From prior year, we were below 40%. We are now heading closer to the levels that we were achieving before the COVID-19 pandemic. And as you might have seen, our recent performance for this year up to June, we issued a trading statement yesterday. You see that the performance has improved further, confirming that it looks like we are really getting out of the woods, as it were. So we were back to the pre-pandemic levels. We have a committee, a board committee, that oversees that part of the business. Internally, the procedures were followed, more especially that we are looking at a specialized area. Now we are talking of the big three, and all the big three were approached. The challenge we have is that there have been certain developments in the market. For your information, this process is not something that just happened last week. It is a long process. Some of the developments have happened long after internally we had gone through a number of our procurement processes. So I would be talking about close to 8-9 months ago before some of the concerns that were raised, which are specific to particular events, came up. But as a board, we are confident in the choice of the auditors, and we know that what has happened so far is unique to the specific sectors in which the corporates that have been impacted operate in.
Frank Harawa is a minority shareholder. He is overly impressed with the Sunbed's performance, but he is a bit skeptic with why some shareholders are holding their shares, but also speaking on how Sunbed has arrived at adopting or employing their auditor. Let's hear from Harawa.
I think this has been our cry for a long time. It's years now, and little is being done. So what we have done as the Minority Shareholder Association of Listed Companies, Mr. Aliko, we have asked to meet the major shareholder so that we can talk to him. Maybe we can put sense to the major shareholder as well. Because look, if the shares in issue are few, less than 1 billion, we're talking about 200 and something million shares, and 71% are in the hands of government. The 15 is in the hands of press corporation. The other part could be in the hands of the management companies, and then maybe the public. So maybe the public has only maybe 8%, 7%. So we're saying this is not enough. So we're saying and because of that, you find that there's no liquidity in the market. So the share price cannot move up because no government can sell shares on the market. It cannot do that. The other shareholder, press corporation, cannot do that. Therefore, there will be no liquidity in the market. And because of that, then the share price will not move up as it's supposed to because there are no shares. So it's like both of us, we are losing. The major shareholder is losing. We are losing because there's no movement in the market. So we're going to meet them. And we're proposing to them that I think this is long overdue. Time has come now that something has been put in place so that we have enough shares in the market. People can buy and sell these shares in the market. The order that they have just taken out now, to us, it appeared that it has only been there for less than 2 years. And we're saying, what rules are we using? What laws are you using for you to take out the former auditor and bring in a new auditor? And also we're saying to them, did you advertise this? And we're saying, do you know what is happening out there, that several companies have suffered from the same auditor that you are appointing now? In public, there is no good news about this auditor because companies have lost their money in billions. And we are saying, but really, what criteria did you use to appoint such an auditor again? They try to justify it, but we're not happy.
Francis Waliwa, who is the Chief Executive Officer for United Civil Servants SACCO, is arguing that to achieve a safe, reliant and inclusively wealthy nation requires citizens that have financial management, knowledge and skills. He believes that if the citizenry have this knowledge, it can help to change the country's economic fortunes. In fact, he demonstrates in an interview with Business Now how UCS SACCO has managed to change lives of 70,000 of its members and grew its asset base to 34 billion kwacha in just under 7 years. Let's have Waliwa.
We cannot achieve that goal if the people, because to create wealth, it is the households, it's the individuals that create wealth. They should be well off themselves. And if the people themselves do not have the knowledge, the attitudes, and the behaviors on how they make money, how they may be little money. It could be people employed. Obviously, you can say, yes, they are already making money because they are getting salaries, right? But now we are talking about how do you use that money. In terms of, we talk about 4 things. We are talking about how the people spend the money. Sometimes we are very much consumer inclined. We are inclined very much on consumption. We are talking about saving out of that money. Saving for whatever goal, it be you want personally to create a capital for a short-term goal or even a long-term goal to invest in something or even to plan for your retirement. You are talking about planning on how you tackle your emergencies. So you are planning in advance towards your emergencies. So, we are also talking about borrowing. Different schools of thought, maybe borrowing is not good, maybe it's what. What I would say quickly as one of the pillars, the 4 pillars that I'm talking about that people need to know, we are talking about borrowing, not for consumption, but for productive means. If, just imagine, you are able to go borrow because you have an idea that you need to chase and you have borrowed money, somebody's money. Yes, you are going to pay back with interest, but you are going to invest to push an idea, a business idea, which at the end of the day is going to make you earn, pay back with interest and be able to have something remaining with you. I would call that a miracle because you had an idea but you did not have any capital. So that is also very key because sometimes people go borrow for maybe for consumption. Maybe they want to, where consumption is not just beer, it may also even be just to buy bread, but that is not going to multiply money. Yet you have yourself a burden of paying back that money for a longer period of time. So if people do not have this knowledge of this, how they make money, how they earn more, how they save money to work for them tomorrow, how they invest, how they generate more money and create more employment, even of 2 or 3 people, where do you expect a nation to inclusively get rich? United Civil Servants Circle started some time back, like 1994, but some 6-7 years ago, we realized that as a circle, we can help in bringing this knowledge to multitudes of Malawians so that they get better. When we realize that we can do more, we can, a circle is like where people of mutual interest put their resources together and multiply that as they lend the same money to themselves. In the long run, they have more, we create more wealth within the circle and within the members. When we realized that, we went on a very serious campaign, so much so that by that time, we had 6,000 members. Today, we have 70,000 members. And this has translated to a number of, let's say, fortunes for the circle and for the members, because the asset base now for the circle has grown to 34 billion from 600 million 7 years ago. This means our members, the circle is growing, and when it is growing, it's able to offer our members better loans, more loans per member that can be repaid over a longer period of time, which means we can also train more people on about financial management, financial wellness, getting them ready for retirement. This means we are able also to support the communities. The very first thing is, if in our vision is wealth creation for all in the country, from our space of circle, business model of United Civil Servants Circle, yes, changing lives. And our short-term goal in the meantime is that by 2026, because we are in our 2022 to 2026 strategic business plan. So this one now that we are already halfway through, it's our medium term. In the medium term, we would like to reach out to 130,000 members from this time around 70. When we are starting the strategy, we are 40,000, so you can already see the strides that we are pushing. This shall translate to over 100 billion in assets, and this shall mean more return to our members and giving us more capital and the asset base to be able to reach out to many members with our financial literacy, with better loans, with more savings that would actually give back to them far much more and many more good aspects, including employment, much more employment. In the long run, that's beyond 2026. We are looking at venturing to support on a bigger scale. We have already started that. People that are running small and medium enterprises. We are looking into supporting people with equipment that would like to run the mega farms, for example, say in farming, they want maybe to do real estate, land. This is also what we teach our members, that they can also think of maybe growing trees, because climate change is actually hitting. So maybe we shall also support people doing this, so that now, say some 10 years from today, we have a lot, and we have supported our members far much a lot, having grown the circle also far much a lot. The community, we want to stretch out to every other school for the blind. That's excluding other corporate social responsibilities that we run, but we would like to specifically go to these schools for the blind and the blind and those maybe that are deaf, to support them in whatever way we can. We have already run around the country. We have seen there is a lot that we need to do. We believe we have that responsibility, because for us, we believe that it is the life that you touch, which at the end of the day brings impact to the business that you do or to the life that you live.
Well, with that, we've come to the very end of this edition of Business Now, right here on Zodiac. Until next time, my name is Alex Banda, and it's goodbye.